Namaste to all dear warriors. Here is the another method alternate to when separate set of books are not kept for joint venture and all of the co-venturer keeps the books of accounts, and this is popularly known as memorandum. Joint venture account method. Which method? Memorandum joint venture account method. When they doesn't tell prepare in the books of A, in the books of B, ऐसा कुछ नहीं बोले, then you can go with the memorandum joint venture account method. In memorandum joint venture account, you will prepare a joint venture by taking all the transactions of A debit side and all the expenses of B debit side, and sales made by A and sales made by B by writing their name A account to B account, by A account by B account. For everything whatever they do, you will write their name except this one transaction between the co-venturers. ये एक ही चीज़ नहीं आता, ఈ ఒక్క ట్రాన్సాక్షన్ రాదమ్మా. A is receiving goods cash from B, because for them it is cash account debit to joint venture with B account. For B it is joint venture with A account to cash. So he is paying amount, another person receiving. In this transaction, joint venture account will not get affected. For expenses you will write, for income, stock taken over, for everything done by A and B you will write their name. Okay, expenses on the debit side, sales credit side, and closing stock credit side, similar to our trading account. That's it. So let us do this method. Okay, see here. Alternative to when both the parties maintains the books of accounts. When all the parties maintain the books of account, because A and B are there, so we wrote both. Alternative method 2, memorandum joint venture account. Which account? Memorandum joint venture account we will prepare. So let us see how it will be done. So first, debit side to A account for purchases 4,80,000, material supplied 1,20,000, expenses 9,000, total 6,09,000. Similarly, for the B's transaction, purchases 2,40,000, supplied 60,000, and expenses 5,000, together 3,05,000. Okay, sales made by A account 8,40,000, by B account 2,40,000. Stock taken over by A and B, by A account 12,000, by B account 11,000, total 11,03,000. So from 11,03,000, if you deduct 6,09,000 and 3,05,000, totally 9,14,000 you are deducting. From 11,03,000 we are deducting how much? 9,14,000. So it will be 1,89,000 balance. This 1,89,000 will be distributed to profit balancing figure to A and B as ratio is not given, we are distributing equally 19,400, 19,500, 19,500, right? So this is called memorandum joint venture account. Why we are preparing memorandum joint venture means to know the profit of each co-venturer, how much profit is to be distributed to each co-venturer. To know that value, we are preparing memorandum joint venture account. Then one more account in the books of A. This is the working note. This is your working note, okay? And in the books of A, joint venture with B account he will open. What he will open? Joint venture with B account. To bank for purchases and expenses. Goods purchased and expenses to bank 4,89,000. How means 4,80,000 purchases plus expenses 9,000, together 4,89,000. And for goods supplied, to purchases 1,20,000. And to profit or loss, okay, share of profit, this 94,500 comes on the debit side. Hope you are understanding. On the credit side, by cash or bank, okay, received from B. A is received 60,000 from B, so that amount. By bank, sales 8,40,000. By purchases, stock taken over 12,000. So total credit side 8,40,000 plus 60, 9 lakhs plus 12,000, 9,12,000. From 9,12,000, if you deduct all these three, okay, it will be balancing figure, balance carried on. Sometimes account is settled with bank draft or DD. If they say, you write to bank instead of to balance carried on. 2,08,500. Okay. See, only transactions of A we are recording, but name is joint venture with B. Okay. Out of this, only these transactions, A's transaction only you will write. Okay, you will not write B's transactions. That is what memorandum joint venture account here means. Only he writes his transactions. Okay. Next, in the books of B will write joint venture with A account only his transactions. That is B's transactions only. So B has purchased goods and expenses paid. Expenses paid is 5,000 and goods purchased is 2,40,000. Total 2,45,000. To purchase of goods additionally, okay, two purchases, goods supplied by him 60,000, that one. And share of profit from memorandum joint venture account 94,500. To cash or bank sent to A. B has sent to A 60,000 rupees, so that will come here. To cash or bank, okay, for cash sent to A 60,000. Hope you have understood. Only B's transaction he will write. A's transaction A will write in his books. B's transaction B will write in his books, B's books. Sales made by B 2,40,000. Stock taken over by B 11,000. So from debit side 4,59,500. If you deduct these two, 2,51,000. So amount will be, balancing figure will be 2,08,500. Both sides 4,59,500, 4,59,500. That's it. I repeat once again, it is prepared, memorandum joint venture account is prepared similar to trading account. For the transactions of A, just write A account. Okay. For the transactions of B, you write only B account. Okay. For sales made by A by B. For stock taken over by A account by B account. Remaining is the profit. That profit will be distributed in the 1:2 ratio. 1:1, that is 1/2 equally 94,500, right? In the books of A will write only A's transactions, not B's transaction, because B is preparing his own books, so double recording nahi karte, only they will write A's transactions. So टू बैंक परचेजेस एक्सपेंसेस के लिए, टू परचेजेस गुड्स सप्लाइड, टू प्रॉफिट एंड लॉस अकाउंट, एंड बाय कैश रिसीव्ड, बाय बैंक सेल्स, बाय परचेजेस स्टॉक टेकन ओवर. सी गुड्स सप्लाइड के लिए एंड टेकन ओवर के लिए परचेजेस आता, दैट्स इट. सो 9,12,000 माइनस, इफ यू डू all these minus, you will get 2,08,000 as balancing figure. Next, in the books of B, he will write only B's transactions. A's transaction he will not write, but heading will be joint venture with A account. So to bank for the purchases and expenses, goods supplied by B, to purchases 60,000, to profit and loss account 94,400. okay, to cash or bank 60,000, by sales 2,40,000, by purchases stock taken over 11,000, balancing figure 2,08,000. see here and here balancing figure will be the same. So here I am ending the video relating to joint venture, all the methods 4. okay, joint bank method, okay, when separate set of books are kept, and when separate set of books are not kept, only A is maintaining, both A and B maintaining alternate one. Third video is there, and this is the fourth video where we are understanding memorandum joint venture account method alternate to when separate set of books are not maintained. That's it. So सीखते रहिए, सीखना बंद तो जीतना बंद. जय हिंद.